Hello, everyone, and welcome to Kentucky Small Business Development Center's weekly webinar. We're glad you're here. As we allow attendees a few moments to join our event, I'd like to share some info about the Kentucky Small Business Development Center. As the only statewide, nationally accredited program that provides entrepreneurial and business development services, the Kentucky SBDC plays a vital role in the Commonwealth's economic development by assisting entrepreneurs at every stage of their business life cycle. For almost 40 years, the Kentucky SBDC has assisted emerging and growing businesses by providing the professional expertise, tools, and information necessary to make sound business decisions in a complex and ever-changing marketplace. We do this at no cost to our clients, thanks to the U.S. Small Business Administration, who co-sponsors our program, which is then administered by the University of Kentucky, who partners with regional universities, colleges, and local economic development agencies. We're part of a national network, America's SBDC, with over 1,000 centers across the nation. To learn more about us, check out kybizhelp.com. There you'll find additional resources to help start, fund, and grow your business. If you'd like to request personal assistance, please email us at info@kybizhelp.com or call 1-888-475-7232. A recording of today's webinar will be emailed to you later this afternoon. And also, if you look to the right of your screen, you'll find the chat feature. So if you have any questions for our presenter, you can post them here and we'll answer them at the end of the presentation. And if you would, just please try it out right now by saying hello and telling us where you're from. We'd like to know. I'm Dave Etkin. I'm the center director here in Louisville. And the Louisville Center is one of 15 centers in the Kentucky Small Business Development Program around Kentucky. And with me today is Tony Sears, our assistant center director. Hello, Tony.
Hi, Dave. Hey, I want to send a shout out to Preet Gupta. This is the second week in a row she's beat everybody in the chat.
She's knocking it out. So awesome. Well, today we've got a great program for you. We are going to talk with Brittnie Eiden of Eiden Tax Professionals. She is one of the first Profit First professionals in Louisville. And if you haven't read this book by Michael Malkowitz, Profit First, it is a life-changing event. I really encourage that you do so. I've read it several times, and I have an audio book. I was telling Brittany when I cut grass, I listen to it, pretty much every week. Because you get a little bit out of it every time, but it is a great tool. So I'm so happy to hook up with Brittany and have her come on and talk about this. So Brittany, I'm gonna just turn it over to you, and we'll just kind of get going here.
All righty, sounds good. So I love that you like Profit First, because obviously it is my way of life now. I love it so much. So let's see. We'll start off with me just a little bit. Not going to go into too much about me because I'm not all that special, but I am a little bit fun. So this is me, as you can see here on the screen. I'm married with 3 crazy little monsters. And as you can imagine right now with NTI here in the Louisville and Kentucky area, it's interesting. We like being outdoors. I am a Girl Scout troop leader, and we, in my household, we bleed that Girl Scout green. We love it so much. And we are the cookie people. So we're also some nerds here, and we are obsessed with Legos. If anyone ever visits my office, you will be able to see pretty quickly how much we love our Legos. I have them all over my office. And I joke and say all the time that I cuss like a sailor. Not that I know many sailors to know how much they cuss, but, it's there. So a little bit of my background. So I am an IRS licensed enrolled agent. So for those of you who aren't familiar with that title, think CPA, but licensed federally, not by the state. So we are licensed to handle all U.S. tax matters that come our way. So I attended Sullivan University here in Louisville and loved it. I got 2 undergrad degrees there. And then I finished up grad school for taxation at Bellarmine, just over in the Highlands. Love it there as well. I'm pretty sure I was one of the last graduating classes for that taxation program. So I'm very happy I got that in under the wire. So because a lot of my clients come to me with tax issues, I am a member of the American Society of Tax Problem Solvers. It is fantastic for helping out individuals with those tax problems. And I am a Taxbot certified professional. So Taxbot is a audit-proof mileage and expense tracking application. I will share a little bit more about that with you all later. And then, of course, I am certified in the Profit First Cash Management methodology. I am one of two in Louisville. The other Profit First professional in Louisville is my dear friend, Kim, who may chime in at some point in the chat. We partnered together. She handles the books and I handle the tax side of things. So it is a lovely partnership that her and I have to wholly take care of our clients. All righty. So this right here, why did you start your business? I always ask this because it's not being selfish to say that you started your business to make money, because in reality, you probably wouldn't be doing this unless you were making some money. And it's not a selfish thing, because we started our businesses to help our livelihood for the most of us. So a lot of people will tell me they started their businesses to help people, but ultimately at the end of the day, if you're not getting a paycheck, you can't just afford to continuously give and give and give. You have to be able to take care of yourself first. Just like many people say, or you hear on the airplane, you have to put the mask on yourself first before you put it on the person next to you. So, all right, this is a little bit of the overview of what we are going to talk about today. So this is actually kind of a shortened version of our Profit First Live. So this is the overview section of it. Profit First Live is a 2-day immersive program that we typically hold in person, but right now we're trying to adapt that to a virtual environment. But the full program, it dives really deep into the business financials, and you walk out after that 2 days a little bit exhausted, but you walk out with that plan of getting Profit First fully implemented into your business, and most of the foundations are set up. So that is a really lovely thing. But let's see, now is the time. If you have not already, go on and download that worksheet and we will dig in and get started. So, sorry if you hear the littles in the background. Of course, most of us have children home right now. So in addition to axioms, so an axiom by definition is a statement or proposition which is regarded as being established, accepted, or self-evidently true. So one of the places that we see this the most is with prior generations passing along their knowledge. So if the prior generation says that it's true, the current generation, we typically assume that it must be true. But you know what they say about people who assume. So one of my favorite quotes is actually from Men in Black, but it holds so true. And it's 1,500 years ago, people knew that the earth was the center of the universe. And 500 years ago, people knew that the earth was flat. Imagine what they'll know tomorrow. So the statement does hold a lot of truth. So there are so many things over the years, decades, centuries that were known facts that have proven to be either completely false or they are the absolute hard way of going about doing things. So one of these things that people know is true is the accounting equation. And while I'm not saying it's completely wrong, I'm here to show you a little bit of a different way to think about that. So here is that standard accounting equation. So this is the formula for business as it has been around for years, decades, centuries, but it's kind of crap. So if you look at this equation and really think about it, sales, which is a requirement for business, minus expenses equals profits, meaning you, the business owner, get what's left over, or more commonly, how small that is, or the negative of such. So you end up shelling out money towards the company. So, I mean, we've been doing it wrong for years, but it's not really our fault. We were taught to do it this way, and we're not alone, and it's easily fixable. So while we were given and taught this incorrect formula, GAAP, or the generally accepted accounting principles, which are the rules that all of us accountants must follow, it's foundationally correct, but the formula that it gives us, that sales minus expenses equal profits, it's a lie. So there are 28 million small businesses in the US, and 22 million of them are all break even, and they all use this formula. So that means roughly 80% of businesses are surviving check to check. So accounting alone, it just focuses on the numbers. So GAAP focuses on the numbers, but it ignores our human behavior around those numbers. And as far as I know right now, we're all humans. So we all absolutely are affected by our behavior. So this is a little bit of an exercise. So which one of these individuals would you say is inherently good and which one is inherently bad? So don't let this break your brain. There's no wrong answer. This is simply just to show how our brains work. So this is an example of the priming effect. If you look at the words in both person A and person B, they're exactly the same. They're just in a different order. So in our lives, we have been taught to put importance on the things that come first. So most people will instinctually think that person A is bad and person B is good, when really they are the exact same. So this effect, it's constant through all aspects of our lives. And the reason that I bring this up is because we want to flip this script for the accounting equation. So this is the accounting equation. So we remember the old formula. The expenses are before profits. So this makes us believe that profits should come last and expenses have a greater importance. But this is the profits first way. So we flip that script there. So the new equation is exactly the same mathematically. However, because we swapped expenses with profits, we instinctually put more importance to the profit than we do the expenses. And as we should, because in all reality, your profit or the money in your pocket is more important than expenses. So profit as it is now is an event, but it should not be an event. It shouldn't be something that just happens once or twice in your business. It should be a habit, something that you are experiencing every single time you make a deposit. And we are going to show you how to do that. So bank balance accounting. So this is where we get into a little bit more of the emotional behavior behind it. So the vast majority of entrepreneurs manage their cash flow via bank balance accounting. So by show of hands, if you want, who looks at their profit and loss each time that they want to spend some money? I'm an accountant and I don't. So if I see anyone who would raise their hand for that, then that would legitimately be a surprise to me. So, but this is what we should be doing as a business. We should be looking at that to see, oh, is that money there for us to spend? But we don't. Number one, because it's not convenient. And number two, it is not logical. So like most humans, you probably check your bank balance to see if you have money to spend. This isn't just for business. If you're anything like me, you do it for life in general. Oh, I need to go to the grocery. Is there money there for that? It's just instinctually what we do. If it's there, we use it. So here is a little bit of where the kicker comes into play. Most people only have one account for their business. And if they even have that, many people use their personal accounts for their business accounts or vice versa. So I'm not going to ask those guilty parties that are doing that to raise your hands, because in the eyes of the IRS, that is one of the biggest no-nos, and it sort of makes me a little nauseous to my stomach as a tax lady. But yes, I've seen far too many audits go south because of that fact alone. But back to that one business account. If you've ever written a check out of the business account or out of your personal account even, and that person didn't deposit that check immediately. So you went on with life, you did your bank balance accounting, you looked and you saw that, oh, well, they must have cashed that check. Look, I have some money. I'm going to spend it. And then bam, of course, it's the exact next day when that person deposits that check, and that leaves you in a bit of a lurch. So, and this is why bank balance accounting doesn't work, but it can work if you put in some easy fail safes for yourself to keep you on track. All right, so here's our lesson from a tube of toothpaste. So Parkinson's Law. Parkinson's Law states that as the availability of a resource increases, the demand for that resource increases at the same rate. So this actually comes into play in every aspect of our lives, but the most noticeable area is time and money. So we're going to look at our everyday example, at our tube of toothpaste. So you go to the store and you buy yourself a brand new tube of toothpaste. For the first week, you're putting that huge Aquafresh swoop of toothpaste on your toothbrush, and a couple of times that glob falls into the sink and you're like, oh, it's okay, I'll just wash it down. I have plenty of toothpaste in that tube for like a fresh new slab to put on there. So the weeks pass and eventually you end up here with this little bitty rolled up tube of toothpaste, and you keep forgetting to add it to your list as you go to the grocery. So you've got to make it through to the next day. Now, instead of that big commercial swoop that you put on, you're just putting on like this little bitty schmear, just what you can get out, just enough to have like some minty freshness in your mouth and to get the funk out. And then, oh my goodness, you drop that little bit of toothpaste that you have gotten on that toothbrush into the sink. So now instead of washing it down the drain, you're taking your toothbrush and you're getting it out of that sink. Hopefully it's a clean sink, but you're scraping it off the side of the sink, and you're brushing your teeth to make your teeth sparkle just because you don't have enough. Eventually you're using like all your might to squeeze that tube of toothpaste, or you're like me and you get a little bit creative and you cut off the end of the tube of toothpaste and you're pushing your toothbrush around in there to get that last little bit out. So this absolutely holds true for money. So with time, we'll start with time first. If you have 2 weeks to complete a project, it'll take you 2 weeks to complete that project. But if you have 2 days to complete that exact same project, you're going to find a way to make it happen within that 2 days. So we find ways to get creative and get things done. And the same thing holds true for money. When we have it, we spend it. We may go out to a huge fancy dinner every night if we have money. So if we don't have it and there's nothing to spend, we are going to be raiding the cabinets, or we may go and pick up one of those multi-packs of ramen for like $2 at the grocery store, and that's dinner for the rest of the week. So, but we get creative. So we might even be able to raid the cabinets and make like a 5-star meal out of what's in there that we wouldn't have even known. We still have the same end result, though. One might taste better, but we still have a full stomach at the end of it. So the same thing holds true for your business. If you have less money to spend on expenses, you'll spend less. And you usually end up with the same or a better result. And I can actually guarantee you that with those less expenses that you are going to have for it, you're going to feel better because you were able to accomplish so much more with less. So here are 4 steps to profit first. This is actually our first step right here. So small plates and multiple accounts. So has anybody ever realized that the larger your plate is, the more you seem to put on it? And as most of us were taught, we need to clean off our plates and eat it all. Now, if you have a smaller plate, we put less on it because there's less space. So we still feel the need to eat it all. However, there's less there. So we're eating it all, we still feel full. And if you're like me, your waistline appreciates the smaller plate a little bit better. So this is where the same holds true for money. If it's on our plate or in the account, we're going to spend it. So why not allocate these things out properly? All right, 1 tray and 4 portions. So portioning it out. Profit First calls for 5 bank accounts. And I know while that sounds like a lot and it sounds incredibly intimidating, I've been using this methodology for 3+ years in my business. And in all honesty, it has only made my accounting life easier. So the first of your 5 accounts is your income account. So just as it sounds, this account is where all the income is deposited into. So income from checks, direct deposits, however you receive money, it all goes into this account. So we are going to think of this income account as our serving tray for all the other accounts. So now we will have preset percentages of income that will be transferred into each of these other accounts. So Profit First has a set target of percentages that are a fantastic reference point for determining where you want to be. These percentages were developed from taking averages of some of the most successful businesses of all sizes and putting them in an easy to follow chart. So this chart is shown in the PDF that we will be sharing with you at the end. But here we go. So when we are portioning these things out, we have to follow our sequence. And in order to keep our diet healthy, we would eat our vegetables first. So we are going to follow this sequence as well. And we are going to allocate and distribute and pay bills. So remember earlier how I was talking about the priming effect? So this is why the allocation order is so important. The sequence of how things are presented to us dictate our use of those things. So if you take your profit first, you are demonstrating that profit is the most important thing in your business. Profit is then followed by owner's pay, because you as the owner, while sometimes you might not think it, you are the most important employee in your business. So you deserve to be paid. Let's see. So now the next one is accolade tax. And this is where my heart is because I am a tax lady. Let's face it, the IRS is the most brutal collection agency in the world. So it's very important to keep them off of your back. So we want to make sure that we are setting aside that money for taxes to make sure that we have that to pay in when we need to make that payment in. We see far too many companies that get to the end of the year and owe in thousands, 50, 60, 70, sometimes hundreds, thousands of dollars. And that is a rough ticket to have to pull out of your hat at the end of the year. So if you've already got it sitting there in an account, then that is the best thing that you can do for yourself. But then lastly comes the operating expenses. So why do we put the operating expenses last? You're showing yourself that you can make it work, that you can be innovative and you can be efficient and frugal. So when you plow back or reinvest into your business, that money, you begin to push and try less. So if you limit those operating expenses, you're telling yourself that you can do it on that. And I promise you, you can. So of course, what comes first gets done and what comes last gets forgotten. So we want to make sure that we are allocating everything in this order because we're making sure that we put those most important things first. Profit, because you get the benefit of that profit. Owner's pay, because you're the owner. You deserve what the business is going to be paying you because you're not doing this for everyone else. You're doing this to support you and your family. tax because nobody wants to deal with the IRS except for me, and I know I'm crazy. And then operating expenses. So this is our step 3, removing temptation. So I'm not sure how many people here like cookies or other snacks, but I'm willing to bet almost everyone has some type of snack that they just can't say no to. I did, and that was the Cheesecake Factory's their Cinnabon cheesecake. I could not say no to that to save my life if I had to. But if you don't have it around you, you don't have access to it, so you can't eat it. So just same thing with snacks at home. So if you buy them and you have them here, they are going to get eaten. And I'm sure that I'm not the only one who has noticed that their pants have gotten a little bit tighter since the start of COVID, being home with all your snacks. But if you don't buy the snacks, you don't have access to them, so you can't eat it. So the same holds true for money. So this is where with Profit First, we have our out of sight and out of mind. So we have our 5 foundational bank accounts: income, Profit First, owner's pay, tax, and operating expenses. But with profit and tax, we don't necessarily want them hanging around where we could access them. So just like our snacks in the house, we want to make sure that we keep these out of sight and out of mind, and it is not accessible. So this is where a bank number 2 comes into play. So it's sometimes referred to as the inconvenient bank or the PITA bank. And at this bank, you will not have any online access. You won't get checks for the account. Sometimes people choose to use small community banks in neighboring counties or states just to add an extra layer of inconvenience. I personally chose a small local bank that has few locations and horrible hours. So it would have to be a real emergency for me to go and make effort into getting money out of that bank. So I have no access to the bank other than walking in and waiting in line, or right now with COVID, getting an appointment. And realistically, you should only be making, at least from the profit hold and tax hold, you should only be making 4 withdrawals from each of these 2 accounts a year, and that is it. So, and these are going to be your quarterly estimated tax payments and a quarterly profit distribution. So when you are doing your allocations, the money that goes into your income account gets allocated. It goes into your profit, into your owner's pay, into your tax, and into your operating expenses. The money that is in your profit account, you are going to transfer it to that profit hold account at that second bank that is inconvenient to you. And you're going to do the same thing with your tax. And then 4 times a year, once a quarter, you are going to go in, you're going to take the money out of that tax account, and you're going to pay that in to the IRS, to the state, and to any local taxing authorities that you may have. And you are going to be in front of that ball and ahead of the game. Now your profit, you actually get to take a profit distribution. So like any big multi-million-dollar business that has shareholders and does profit distributions, you as the business owner get to benefit like they do. Once a quarter, you go in and you take half of the money that is in your profit hold account, and that is your money to celebrate with, no matter how small or large. If it's enough money to get an ice cream, go to the ice cream shop and you celebrate that. If it's enough money to go on a weekend getaway or take a cruise, not a cruise right now, forget I said that, go on a vacation, then that is what that is for you. So step 4 of Profit First is to establish a rhythm. You have the 10-25 rule, and then your quarterly profit distribution and your current allocation percentage adjustments. So Profit First is actually one of those places where the rhythm method works. So the standard rhythm in transferring money on the 10th and the 25th is a very logical reason. So the logic behind these specific dates is that you transfer money out of your income account into those other 4 accounts on the 10th, and you can have the money in your operating expense account to pay those bills that are on the 15th. And the transfer on the 25th has that money into those accounts so you can pay bills on the 30th or the 1st. So it's really a good thing to keep this rhythm so you can start to see if there are patterns in your business. So a lot of times seasonality usually affects the real estate industry as it does the tax industry, me. So when you go and you see this pattern, you can kind of know what to expect and know what is coming in your business. And then you can work with your accountant or profit first advisor to develop strategies to make sure that you are covered, both you, the business, your employees, that you all are all covered during those times when business might be a little slower, and not overspend when business is booming. So like I said already, you're a business. You should be making that profit distribution to yourself quarterly to celebrate. So something else that happens quarterly is you should be sitting down with your accountant and talking about a few things. So at Profit First, we have caps and taps. So your caps are your current allocation percentages. So that is where you are now in your percentage range. And then we have those target allocation percentages. The target allocation percentages are the ones that you're going to get at the end of this in that nice little chart to show you that's kind of the goal of where you want to be. But with Profit First, initially we look at where you are now, and then we set up a plan to get you to those target percentages. So quarterly, with your Profit First person or your accountant, you need to be adjusting these current allocation percentages to make your transfers, because how do you eat an elephant? One bite at a time. So you are going to be taking these little snippets, and you're going to be manipulating these percentages just a tiny bit every quarter until you get to that target percentage that we all want to be at. So I'm thinking now that along with this, one of the things that I am going to be divvying out to everyone as well is along with those target allocation percentages, is a form so you can actually do an instant assessment on yourself and your business. You are going to basically put in your income at the top, and then you're going to put in your current expenses. If you have any profit, you're going to put that in there, and then you are going to do the math as it shows on the form, and you are going to kind of see where you are in your business. From that point, you can work towards manipulating those percentages to get to where you want to be with those target percentages, or you can work with someone like me and Kim if you would like, and we can assist in that. So something that will be going out here in just a moment is my gift to everybody. So everyone, whether you've heard of Profit First or not, you can actually get the first 2 chapters of the book for free. You can get those, grab them, and I would love to hear anyone's feedback. And then let's see. So we also have a Profit First Louisville group. So if anyone would like to join us in that Profit First Louisville group, Kim and I, we assist our Profit First clients in there. We assist people who are curious about Profit First, kind of put them in the right direction if they need any guidance. And then let's see, because I'm a tax lady, I cannot move on without giving a couple of tax tips at least. So file early. So I always say this, don't be the extension filer, please. I know it's a common thing to get into, but the sooner you know the damage or the amount that you owe, the more time you have to prepare. So next, it's a common misconception, but an extension is not an extension of time to pay. It is only an extension of time to file. So If you are a Schedule C or a sole proprietorship, or you are a corporation, your payment is due on 4/15. Otherwise, you are going to receive a failure to pay penalty. So, but the tax returns for a S corp and a partnership are going to be due on 3/15, which, yes, I know it mentally hurts a lot of people, myself included. But so the more aggressive that you want to be with your tax deductions, the better your proof or your documentation needs to be. So this means fully IRS compliant records, no guesses, no estimates. Mileage and expense tracking apps, don't just have them on your phone. You need to make sure that you are using them. And then, like I mentioned earlier, Taxbot. Taxbot is actually used by a number of real estate agencies throughout the country. Yes, it's used through real estate agencies throughout the country, and a lot of their state associations recommend this application. I have found this one to be the one that has been best overall. It was designed and created by a former IRS attorney. So it tracks your mileage, it tracks your expenses, it gives you a full audit proof report at the end of the year that you can take to your accountant, or should you ever get in trouble, you can take it and put it on that IRS agent's desk. So one of the things that I really do love about this too is it helps out with all of the things that we miss as humans and individuals that we might not know that we need. Because when you eat out a meal, you not only need to know the who, the what, the where, the when, and the why. So you need to have that documentation. And this application actually helps to track every single bit of that for you in a easier way. It connects to your calendar, so it's very lovely there. But yes, this is absolutely my recommendation for anyone who might need a mileage and expense tracking app. And now, questions.
All right. That was great, Brittany. So I'm going to kind of start off with a couple questions because I've used, I kind of fell into this a long time ago, way before Michael wrote the book, but I would just kind of use this sort of by accident. But, there's something else that you can use this whole methodology for that you really don't think about it. And you can use this for your personal finances too, can't you?
Absolutely. I will say this has saved my marriage using accounts in these structures. So yes, it is absolutely something that you can use in your personal finances, having those separate bank accounts, and it saves you a lot of heartache. So all your bills are taken care of, and what you can have to play around with later on.
Yeah. And the other thing about it is it's kind of daunting when you look at it that, you're setting up all these banks and moving money around and stuff. But, once it's done, it's really easy, and I don't know if you agree with this, but I kind of recommend that if you want to get started and put your toe in the water, maybe you don't want to dive all the way in the deep end. If you just open up one account and then you just automatically transfer some money into that account. And, the story, I think Michael tells the story, is like, when you got your first real job and they started giving you benefits and they would take 401k money out on your check, and you would look at your check and you think, man, this is horrible. They're taking all my money. But after a while, you just learn to live within that. It's not a big deal, So if you just start that way, it just works awesome. Would you agree?
Absolutely. So if you want to start off slow, the best way to go about doing that is starting off with your profit account, having that separate profit account, and just taking a small percentage every 2 weeks or so out of that income account and socking that away for the rainy day, putting that into your profit account.
Yeah. So Tony, do we have some questions for the chat today?
We do, Dave. So Brittany, great job. It was excellent information. Thank you. So the first question comes from Rodney. He says, does this system work best using fund accounting principles, or can a business even set up fund accounting?
I mean, with what type of fund accounting? That would be my question.
I think fund accounting is kind of like nonprofit accounting, where you have a set
So
amount or something maybe.
more on the nonprofit accounting, it absolutely works for nonprofits. You just need, with the money that comes into that income account. Now, if you have any type of additional amounts that are set aside for anything, that money that you put into that income account, that what would be transferred into there for, that quarter, that month, that would be the money that you would allocate out into those other accounts.
Okay, thank you. So the second question from Rodney is, what is the rule of thumb for the allocation percentages?
So that actually depends on the amount of income that you have, and that is something that is going to be sent out. So typically businesses under $250,000 a year, the percentage is 50% to owner's compensation, 5% to profit, 15% to tax, and 30% to operating expenses.
Okay. So this question, what you just said kind of leads into this next question. Which account do you pay bank debt from, or do you need a sixth account?
Bank debt, like credit card debt, I'm assuming.
Or actual loans.
Loans.
Mm-hmm.
So those would actually come out of your operating expense account, because that is a standard debt. Now, if you are looking to crush that debt and kind of snowball that debt, then you would actually take a little bit of your profit money that is distributed every quarter and take and throw that at that debt if you're trying to crush it a little faster. But if it's a longer term liability, 5 years, you're paying $500 a month, then that's going to be a pretty standard expense for you for a while. So that needs to be just coming straight out of that operating expense account.
Okay. Dave, do you have any questions? I have one more if you...
Go ahead.
Okay. So Marilyn says, I use QuickBooks Online. How would she coordinate using this system with what you have just discussed?
So most of my clients actually use QuickBooks Online. It is a very easy thing to do. So realistically, you're setting up your additional bank accounts. You are linking those to QuickBooks as well as you normally would. The only real difference is the transferring of funds. So you just need to make sure that those transfers, when you're in QuickBooks, they are actually documented as transfers and not income and expenses out of those accounts. So, and if you're just transferring those aren't going to show up on your profit and loss as an expense or income, since it's just moving your money between accounts.
Okay. So Shy Armstrong, she wants to let you know that this is a great book. So
it absolutely is. I agree with you completely. And if you haven't, the audiobook is amazing. Mike Michalowicz, the author, actually reads the book. And for those of you from Louisville and have been here for a while, he is that like shock jock DJ sounding guy. I always think like late 90s, like DJ X, that is what, like Mike Shannon, that's what Mike Michalowicz sounds like to me. And he is a very entertaining listen. So I highly recommend the audio version of the book as well.
Okay. And Rodney wanted me to tell you thank you for answering his questions. So thank you.
Absolutely.
So Brittany, what would your advice be on, I know some of the accounts, the money goes in and stays dormant. I mean, would you set up like money market accounts, or would you use more interest-bearing accounts for things like that?
Yes, absolutely. So with the income account, that account, since you're really only making 2 transfers out of that account a month, you can actually set that one up as a higher interest savings account if you wanted to. And then the same kind of holds true for your owner's compensation account. You're only taking money out of that twice a month. So that can be a savings account. The operating expense account, is obviously going to be a checking account because you're going to need the checks and the debit card for that one. And then those profit and tax hold accounts. Money market is fantastic for those accounts at that separate bank. So that could even be a factor when it comes to looking for that bank number 2 is which banks have the highest interest on their money market accounts. Because your money is going to be sitting there for 3 months, and the money that's in your profit account, at least a portion of that is going to be sitting there pretty consistently as kind of a rainy day fund too. So heck yeah, the more money that you can make on your money, the better.
Yeah. So this is drilling into the weeds a little bit, but when you transfer out of the operating account into the other sub accounts, would you recommend doing that manually, or would you set up an automatic transfer? If you kind of, what would you say that?
Well, with most banks that I have come in contact with, which has been quite a few, you can set up automatic transfers for a dollar amount. You can't set it up for a percentage-based amount. Wow. So that transfer that happens on the 10th and the 25th, that is typically a manual transfer. However, if you are paying yourself on payroll, or when you're paying yourself, if you're just writing yourself a distribution check out of that operating expense account, you can set that up as a automatic transfer. So let's say you're paying yourself 50% of everything, but you're giving yourself a salary of $5,000 a month. You can set that up as an automatic transfer from that owner's compensation account into the operating expense account. So then you can write yourself a check from the business there, or if you have it go through payroll, then that'll pull from your operating expense account as well. So yeah, I've been looking for banks that will do transfers with percentages for 3 years now, and I have not come across one that has been able to put that into place yet.
So hopefully there's some bankers out there listening today that maybe can help us out.
It's needed, please. That's the one part I would love to automate. But it is really good for the business owner to be doing those transfers, because then they kind of see what that rhythm is and what their accounts are supposed to look like. So at the end of 1 week, they might say, oh, hey, my income account is a lot lower this time around. What was the change? What happened? So it's good to see it, but automation is very nice.
Yeah. And again, this is more of a cash management tool, not an accounting tool, though, right?
Yes. So everyone across the board is still required to do their books and use the GAAP principles. But this is that cash management system you're putting in place to make it easier for making those decisions at a glance. So you can look at those accounts and see, hey, okay, I do have money to spend. I can spend it. And it takes away the money and puts it in its own separate place that you might need to save for something. Because like I said, even with the cookies, if it's not there, you're not going to eat them. Or if the money's not there, you're not going to spend it. I know myself. I will spend money if I have it. So every year I take the money for our property taxes and I put it in a CD in a bank. So I know I can't touch it. And then when it comes time to pay property taxes, I can get it out and pay those property taxes. Because if it was in my normal bank, I would spend it without a doubt. I know myself, I would do it. It probably wouldn't be some shoes, but I'd probably end up, buying stuff for the kids or go out to a lot of nice meals.
Yeah. So do you recommend that just kind of go just talk a little bit again about if someone wanted to set this up tomorrow, I mean, what would be the steps? Would they have to do it all at once? I mean, do you have to go to, just walk us through that one more time, because it's
okay.
A little bit like.
The setup itself it's not that intimidating if you just kind of go with it. I know from hearing it can sound like it, but it's really not that bad. I do know a lot of banks they'll question, like, really, you need this many accounts? But ultimately, yes, it all works out fantastic. So realistically, if you want to go in and open up your 5 accounts, you can go into your regular bank and open up those additional 4 accounts. The account that you have right now, that main account, you can keep as your operating expense account because you already have checks and cards and whatnot for that account. And then it's transitioning where your payments go, getting that into that income account. And then really it's just a lot of it is establishing that flow. If you are an already established business, I would not say jump directly to those target percentages because that could potentially hurt the business. You kind of want to ease yourself into it. So that's where you would go with doing that instant assessment or what Kim and I offer, which is a full assessment, and we call it our ECROP. It is our evaluation, conversion, and rollout plan. So, but that digs a lot more into the financials, like really deep into those financials. And we make sure that everything that you have set up is, set up is right. And then we tell you how to roll it out going forward. But if you use that instant assessment, that gives you a really good picture of showing you where you are now. And then you kind of just start with those percentages and then manipulate them just a tiny bit, put more in profit, 1% more in profit, 1% more in owner's comp, 1% more in tax, and reduce the operating expense by 3% for that quarter, and kind of slowly do that until you get to where you want to be. So you get to that top of the hill where you need to be. And then really it's just making sure that everything is accounted for. And since most people do use QuickBooks, I will say it really streamlines all of the back end work when you're going in and reconciling your accounts. Now, instead of fighting one account where there's 700 transactions, you're dealing with 3 accounts that have 2 transactions each in them. And then you have your income account, and everything in there is going to be income. So you kind of already, that's an easy account. It's all income, it's all deposits. And then everything that's in your operating expense account, that's all expenses. So you're not trying to figure out what happened when and why this money is there. So it really kind of streamlines that effort on the back end of making sure that it just making sure your expenses are where they need to be and your income's handled, and it makes that a lot easier.
Nice. Tony, you have another question?
Sorry about that. I was having problems reconnecting you all. So, no, not at this time, but we do have people that are asking about the replay, and I just wanted to let people know that we are sending out the link to the replay and the files later on today via email.
Nice. Well, Brittany, you're the tax lady, right?
Yep.
So I have to ask a tax question before we
go.
go.
Yeah, go for it.
So what's your opinion? What would you tell business owners about the IRS ruling on PPP forgiveness and that you can't back out the expenses that you used the forgiven funds to pay for?
Well, that's actually really logical. So think of it as kind of, and I know that this is going to sound really wonky, but think of it as you're basically kind of getting a gift, and then you're spending that money on something for the business. So you didn't receive that money as income for you, so you can't take that expense when it comes down to it. There's probably a much better way to explain that, but it does make sense. If it's being forgiven and you're not having to give that money back, then you shouldn't be able to take that expense as well, because that would kind of be double dipping. You would get this money for free. You would get to pay that expense with that free money, and then you would get to take that expense as well. So you would almost get to do it twice. So I do get on their part how that works and why it is important that they do that. But again, these PPP rules are changing every single day.
They are.
So, that in itself is interesting and nauseating and a lot to keep up with.
So, okay, so we have a couple of questions now. Can I go ahead and pose them, Dave?
Go for it.
Okay, so Marilyn wants to know, Brittany, so you determine percentages with each deposit? That was what our question
No, Marilyn. So what you will do is you will actually take the total amount that is in that income account. So let's say you've been putting money into that income account from the 1st until the 10th, and there is $1,000 in that income account. So you are going to take the percentages and put those up against that $1,000. So if it was $1,000, you would put $500 into your owner's compensation, $50 into, I'm doing math right now. Come on. $50 into profit, $300 into operating expenses, and $150 into taxes. So you would do those percentages each and every single time that you transfer the money from the income account into those other accounts. It's not per deposit. If it was per deposit, it would be driving everyone crazy. So I understand the feeling on that. So it's just that twice a month is all that you should have to do it when you're making that transfer from that income account to those other accounts. And that's really easy. I send out to my clients a calculator. They put the total amount that's in their income account, and it calculates out what amount they need to transfer into each of those other accounts.
Wow, thanks. So Anne wants to tell you, Brittany, that this is all so smart. She loves it, and she wants to thank you for your guidance as well as the fun, relatable presentation style. So she likes your style.
Absolutely. I try to be fun. I'm an accountant, so thankfully I have a theater background, so that helps out with this.
So MJ says, if a person's money psychology is avoidance, so you're going to have to put on your psychology hat, what might motivate them to use this method instead of traditional accounting?
I mean, if their money psychology is avoidance, then really this should kind of help them along with that, because it takes so much off the plate that they don't even have to think about. So they're not having to look at financials nearly as much. And if someone has a bookkeeper, what's lovely about that is a lot of this, you can say, hey, my lovely bookkeeper, I'll use Kim as my example since she's our Profit First bookkeeper here in Louisville. Hey, Kim, can you do all this for me? And Kim would be like, yep, sure thing. You go about doing what you need to do. I'll handle all this. And at that point, you get to look at your operating expense account and say, hey, I have money to spend. Let me spend that.
Okay. Well, you might think this is funny, Brittany, so I don't get it. But Nicole, she says that NCCPAP and AICPA are still fighting with IRS about PPP expenses. Yep. That sounds like a lot of alphabet soup there. So I know you know.
So those are some of the regulating boards for CPAs and EAs, and they're still fighting with the IRS about those PPP expenses to hopefully come to some kind of good resolution. It would be lovely if we could hear this before next year when we have to start worrying about this on the tax side, but I'm not sure that's going to happen.
Thank you for clarifying that, because I was like, what the what? Okay. But Marilyn wants to tell you thank you for answering her questions, by the way.
Absolutely, Marilyn.
Yeah. So it looks like that's all the questions we have. We're kind of right at the top of the hour. Brittany, I really want to thank you for showing up today and telling us about Profit First, one of my favorite books, and I'm glad that you're here, spreading the word and helping people.
Absolutely.
So, if you and your business want to jump in and do this, please reach out to Brittany. It's so much easier to have somebody to help you get it all set up and walk you through it. So Brittany's a great resource. Don't go it alone.
Absolutely. I had to pull this one up. I love the little piggies. They make me so happy.
So cute.
Yeah. All right. Well, Brittany, thank you so much. Tony, thanks for being here as always.
Glad to be here, and thank you once again, Brittany. Excellent presentation.
Thank you so much, guys.
And Tony, you know what this month, October is, don't you?
Uh-oh, you would put me on the spot.
Oh,
No.
Yeah. It's Cybersecurity Month. So next week we'll have Dean Laus, our cybersecurity expert from Argentum IT, talk about how to strengthen your security of your business so you don't get taken. And so we'll look forward to that. Please come back next week. Brittany, thank you. We're going to have you back again real soon, I hope.
Uh-oh.
Okay.
All right, well, everyone have a great weekend or a great day today, and enjoy your day. And thanks for coming. We'll see you next week.
Thanks. Bye.
Bye.
Bye.